September 15, 2008, will be remembered in the memory of the entire financial world for many years to come as the worst day ever. Lehman Brothers declared bankruptcy. This had the effect of an exploding bomb because Lehman Brothers was the fourth largest investment bank in the United States at the time. On the very first day, stock indices plummeted in a way that markets had not seen since the September 11, 2001 attacks. Within days, a financial catastrophe swept across America and then the world. It was this event that started the global financial crisis, the effects of which we can still see today, 14 years later. Of course, the bankruptcy of Lehman Brothers was not the cause of the crisis, but only a consequence of the problem, which was that the banks over mortgages did not have decent collateral. It's been a long time coming, but right now, there is every reason for history to repeat itself. Right now, millions of investors around the world are watching in horror at what is happening to the world's two largest banks, Credit Suisse and Deutsche Bank. Lately, there are only rumors that they are on the verge of bankruptcy. And their share prices confirm this fact, that they are in great danger. We could turn a blind eye to it, saying that it is a local problem in the countries where these banks are located. But if it were not for one thing, these banks are assigned the role of systemically important financial institutions. In other words, you could say this: these banks are too big to fail. Right now, many people are comparing this to what happened to Lehman Brothers in 2008. Recently, even the CEO of Credit Suisse said that they are at a critical juncture and are planning to restructure. After such statements from a major bank, which supports a huge part of the entire global financial system, people are really getting worried. And now let's look back at all the events happening in the world. The US economy is in a serious recession. The war unleashed by the Russian Federation against Ukraine, with terrible consequences for all of Europe and beyond. Britain's political and financial crisis. China's real estate market is having its worst time. The International Monetary Fund has issued a statement that the worst is yet to come for the world economy. Putting it all together, we get a recipe for another possible global recession that will hit all financial markets in the world, including the stock market, the cryptocurrency market, the real estate market, the debt market, and so on. Now, let's get more specific about the complexity of what is going on and why markets and investors are so scared, and try to understand a little better what is going on and how it could affect us if suddenly these negative events actually happen. Will Credit Suisse and Deutsche Bank go bankrupt? And will it cause a nightmare effect like in 2008? So, let's start with the fact that the stock market has been falling for 3 quarters in a row, and the last time such a situation was observed was just in 2008 during the financial crisis. Many investors blame high inflation, which is at its highest level in the last 40 years. That is the reason why the US Federal Reserve has to raise rates in order to somehow fight such high inflation. But this is where things get interesting, because whenever the Fed raises rates, banks can get into serious trouble. You might ask why. Whenever a company makes a profit, it invests some of that profit in bonds, because bonds are an instrument of guaranteed income. Further, companies provide these bonds as part of the collateral to get new loans from the bank. But since right now the Fed is raising federal funds rates, the prices of these bonds begin to fall sharply, because when yields rise, the price, on the contrary, falls. And this can lead to the fact that the collateral value of these companies can reach a critical point, which can provoke serious financial problems for these companies, and accordingly, these problems automatically spill over to the banks that lend them, because if the company cannot meet its debt obligations to the bank can incur serious financial losses. This is one of the main problems we are seeing at the moment. Now let's break down the banks themselves, Credit Suisse and Deutsche Bank, and why they are so important. Credit Suisse and Deutsche Bank are global investment banks and are considered to be among the leading financial services companies around the world. These two banks are now among the largest banks currently considered too big to fail. Their asset base, which is tied to what is known as their price-to-book ratio, is about the same size as Lehman Brothers in 2008 right before their collapse. This gives an insight into how huge and significant these banks are. Credit Suisse has a rather interesting history. In 2012, the US government sued Credit Suisse for selling mortgage bonds that had a much higher risk than Credit Suisse itself valued them at. And after that, over the next dozen years, they were involved in numerous lawsuits, scandals, and proceedings, including forex market manipulation, tax fraud, the recent scandal over the collapse of the US fund Archegos Capital, which caused them to lose $5 billion, money laundering, and much more. Just a few days ago, on October 24, 2022, Credit Suisse was ordered to pay $233 million as a settlement in a tax fraud and money laundering case in France. All of these situations just couldn't help but affect Credit Suisse's own share price. And just at the beginning of this year, the share price had already fallen by 50%, and over the whole time, the stock lost more than 80% in value. That's why investors are comparing what is happening right now with Credit Suisse to what happened with Lehman Brothers in 2008. Another troubling thing is that Credit Suisse recently went on record as saying that the bank has a solid capital base and liquidity. That would be okay, but here's pretty much what Lehman Brothers CFO told in September 2008, "Our capital position is strong at the moment." But a little later, everyone realized that was far from true. Beyond that, there is another very strong piece of evidence against Credit Suisse. This is the price of credit default swaps, which has now reached levels as high as last seen in 2008 during the financial crisis. In simple terms, credit default swaps are like insurance against your investments. If, for example, you have invested money and your investment turns out to be the right one, you will make a little less money than if you had not purchased these swaps. But if your investment turns out to be wrong and everything collapses, then thanks to these credit default swaps, you can get some of your money back. And most importantly, the more risk investors see in this investment, the higher the price of these credit default swaps becomes. That's why we're seeing these swap prices skyrocket for Credit Suisse Bank, because the market sees and lays out the most negative scenarios in the future. And thus, it is trying to protect itself from the potential collapse of this bank. The same thing is now happening to another big bank, Deutsche Bank, which has an asset base much larger than Lehman Brothers did in 2008. It is also in the category of banks that are too big to fail. Deutsche Bank shares have lost more than 60% in value over time. And just like Credit Suisse, Deutsche Bank has a rich and interesting history, spanning decades. Fraud, investor protection violations, interest rate manipulation, tax violations, intrabank irregularities, and much more. That was a summary of these two banks, just so you can understand how huge and significant they are to the entire global financial system. And there is no guarantee that the collateral of these banks is better than Lehman Brothers in 2008. And even if better, the risk is precisely a complex of many reasons. COVID-19, inflation, the biggest war since World War II, the greatest geopolitical crisis, changes in global logistics, redistribution of zones of influence, and much more. Such a juicy bouquet was nowhere to be seen in 2008. Now, let me just tie it all together. So, Credit Suisse Bank manages $1.5 trillion in assets. Deutsche Bank manages $1.3 trillion in assets. The combined size of their assets under management is about $2.8 trillion. And the great thing about these calculations is that it's about 4 times what Lehman Brothers had just before they collapsed. And if suddenly a situation happens that these banks go bankrupt, then the chain reaction will immediately spread to the entire global financial system and to all financial markets. And if the financial regulators of the leading world countries are not able to take some concrete actions that would be able to stop the collapse of these financial institutions, then this event can become the starting point and the catalyst for a new major recession and collapse of all financial markets. Thanks for watching. Subscribe for more videos. Fi free.